We're experiencing quite a tremendous rally, and it runs contrary to the things we've talked about on this channel. So clearly it looks like so far I've made a mistake, and I want to talk about another time I objectively made a mistake and time proved that to be true. At the May 4th meeting last year, I went very bullish into the market, expecting that the Fed wouldn't hike 75 basis points. There was pricing for the Fed to hike 75 basis points, and I thought the fact that they weren't going to do so implied that there would be a rally on that. The Fed didn't hike 75 basis points. They essentially took it off the table. That was the reading of that meeting. And I was right for a day. The market rallied tremendously. There was a very strong, vicious rally, even stronger than the one we saw today, even stronger than the rally we saw today. However, the next day, we gave all of those gains back in a single day, and we continued to see the market get slaughtered. I believe it was May 4th. You can look at that May meeting. You will see that. You can see it on the left-skewed investment management performance chart. Our biggest ever drawdown was for that reason. We might be in one of those kind of environments again today where I'm just getting skinned alive. Who knows? But my ultimate reading today was this was a hawkish meeting. And the market, I think, interpreted it the same way. When the first announcement came at 2 o'clock Eastern time, 1 o'clock Central, the market turned down. That was the initial reaction. That was the read. Market goes down. I don't know if there's aggressive bearish positioning or what happened, but it seems to me like bulls are just kind of finding some piece of air. Literally, it's like a piece of air and extrapolating that to a whole bullish case. We're going to get into the meat and potatoes here in a second. Then he starts talking. He really lays out everything. The market is tanking to new lows on the session. And then he says something. I don't even know exactly what it is. You know, it's like something along the lines of we're going to remain data dependent, and the market rallies tremendously. So it's a lot of the non-solid stuff that is causing the market to rally. And in my opinion, that's just not the stuff to follow. That's not how you should be pricing assets, but that's what's happening. Now, the 10-year is moving after hours. Maybe this will all correct itself. It's certainly a possibility. As I started this video expressing my former mistakes, it's happened before. It can definitely happen again. Sometimes when you see this kind of euphoria, the best thing to do is just take a deep breath, go away, because the market's still going to be there when you get back, and chill by the fire and do something else. That is sometimes the best thing to do, not to get caught into this volatility, because it can totally reverse. I'm not saying it's going to happen, but I'm certainly not ruling it out. I don't think it's fundamentally based. And let's get into what Powell actually said rather than the market's reaction to some air, because I think it's quite insane. Did he say the job is done? No, he said the job is not done. They still have a lot to do. What else do we want? The bulls have been saying forever, this is going to be his last hike. They're going to have to pause soon. He should pause. He's over-tightening. He's risking over-tightening. Okay, remember that. That's a key thing. The bulls are saying he's risking over-tightening. Like that means they're going to stop tightening and they're not going to care about over-tightening. The job is not done. That was the message today. They're going to keep tightening. He also said the bad outcome would be for them to stop early and realize in 6 to 12 months that they didn't tighten enough, inflation hasn't come all the way down, and it's possibly re-accelerated. This means they're going to do more than they have to. Okay, I don't know what else you want. They're going to do more than they have to. He said they have tools if they over-tighten to combat the tightening. They can ease. They can do that at some point. At some point in the future, there will be need for it. Right now, and for the foreseeable future, they're comfortable over-tightening. This should be absolutely clear to you. It doesn't seem clear today. It seems today like the market's going to rally, but it should be absolutely clear based on what I've said so far. The Fed is comfortable over-tightening. He also said something about only being concerned if it was a severe recession. We talked about yesterday. They're comfortable with the mild recession. The market is currently pricing rate cuts this year because they expect a recession and they expect the Fed to be super sensitive to that recession. They're not super sensitive to that recession. They're comfortable with a mild recession. In fact, they probably want one because they need to see labor loosen. Today, we got some incredibly hawkish jobs data. He even cited this data that we got today in the meeting. 1.9 job openings for every unemployed person. Think about that. That's almost 2 job openings for every unemployed person. They need labor to loosen, to soften. We're not there yet. This is what they talk about being the real part of inflation. Everyone knows goods inflation is coming down. It's basically everything else that's not coming down. Goods inflation, they said, just like we expected, just like we also expected in 2021 or whatever, he said, it's not going their way yet. Fine. He also said for the first time we can say the disinflation phase is beginning because goods inflation has come down. That's not what they're trying to do entirely. They're trying to get, he said, energy, labor, food, these areas are sticky. I get it. We got 1% quarter over quarter or whatever inflation for wages instead of 1.1%. That's still well above 2%. Annualized. That's 4%. That's a lot. They need to see that come down. No indication that it's going to when there's 1.9 jobs for every unemployed person. And Walmart just announced they were going to increase their minimum wage. And, you take your pick. Every company that employs low-wage workers is saying wage inflation is still a thing. McDonald's said it yesterday. Caterpillar said it yesterday, the day before that, whatever it was. Wage inflation is still a thing. And the Fed, that's the big kahuna here. There's actual bottlenecks. 1.9 job openings for every unemployed person. There's bottlenecks still. They're not getting resolved. And the Fed's not cutting rates if that's the case. As they said today, as Powell said today, him and his, participants are not expecting that. So the worst of the economic pain is still yet to come. He said that. The full effects of the tightening are still yet to come. He said that. Expect more economic tightening. And economic weakness. You can do with that information what you want to do with your stock price analysis. That is an important thing. No rate cuts this year. Keeping rates higher for longer. He said that. Ongoing rate increases appropriate. That's not one rate hike. That's ongoing rate increases. We're not seeing inflation. And he said that right off the bat. That was one of the first things he said. He's not saying we're, about to be at the end. We're considering taking a pause. He didn't say that. He didn't even want to answer the question on pause or discussing pause because he knew that answering that question would cause the market to rip. Maybe that's what caused the market to rip. I think that is the craziest thing ever. But it's only been 2 hours, really. I mean, it's been less than 2 hours since the press conference of actual market trading. So, it's a crazy volatile day. We talked about what we saw in May 2020, that time when we made that mistake. Maybe we made another mistake here. I'm already acknowledging that possibility. I'm already dealing with that pain. But we're going to see what happens. I'm not saying the market is going to tank. I'm not trying to bet more here, okay? I have to be humble. I have to acknowledge the power of the market and my ability to be wrong sometimes, at least in terms of market direction in the very short term. What else are you going to do? So ultimately, we're going to see what happens. But my read is that this is hawkish. I invite people to make bullish cases based on what the Fed said today, based on what Powell said today, using actual examples. I'm happy to engage in the comments. That would be additional content. That would be great for anybody else who comes to the video after those comments are left. So that's today's video. I've got a hawkish read on it, but the market doesn't. And that's a wrap. And we'll see what happens tomorrow. We are obviously short Apple. We have a lot of reasons to think that they're going to come in less than expected or at least have weak earnings. And again, that's today's video. Until next time, peace out.